founder fails only when he stops building. It's not about even outcomes, it's not about sizes of the exits and even exits at all. It's the path, it's the journey. And if you continue your building, you're always going to be happy and fulfilled.
Alrighty, hello everyone and welcome to the Deal Maker Show. So today we have a founder that has done it multiple times, been on both sides of the table. We're going to be talking about switching industries, switching sides of the table, you name it. Building, scaling, financing, exiting. He had a really nice exit that we're going to be discussing. But again, without further ado, let's welcome our guest today, Vadim Rogovskiy. Welcome to the show.
Hi everyone, happy to be here.
So originally born in Ukraine, so give us a walk through memory lane. How was life growing up for you?
Well, I was born in Odessa, Ukraine. It's a city actually pretty similar to San Francisco. I realized that when I first visited San Francisco a long time ago. But it's a small city on a Black Sea coast, also located on hills with all the trams going up and down, and very diverse people, lots of cultures from different countries, and lots of influence from different countries, and very cosmopolitan. So it was, I think I had a happy childhood. So my father is he had a career in telecom, and now he's a professor at Polytechnic University. Still there, actually. He's still in Ukraine. And my mother is a music teacher, so she teaches kids to play piano. And I had a business management degree in one of the most well-known Ukrainian universities back then.
Well, in your case, talking about the early years for you, I mean, when you were 18, that's when you started experimenting with startups. So how did the whole startup world come knocking to you?
Oh, that's a good question. Because before I was 18, I never actually had a clear conviction that I wanted to become a founder, because my dad, he was like a career, he has been building like a career his entire life, and that's why I always thought I'm going to be like him, and I tried. So I had a few early jobs when I was a freshman, or I think when I was in the second grade in university. I went to. So I worked at a couple software companies. I worked at online casino, and I worked at a software development shop. But I didn't like it. I was fired a few times because I disagreed with my bosses. But and then I just got fascinated. Like, what if I have some pet projects? Because internet was lots of fun, and I didn't even think of money or some monetary outcome, etc. For me, it was more like having fun because it was so cool. So interesting, and that's how I started to play with it and treating it as a game before I even realized that it could be something serious.
Well, I mean, it became serious with Ad Center. So tell us about what happened with Ad Center.
Yeah, so one of the software companies I worked for, they were actually doing. So one of the projects I worked on, it was like an ad network. Basically advertising network that connected advertisers with websites they wanted to place their ads on, and I was responsible for I had to create basically to cover the functionality, to describe the functionality, all the documentation for a development team, and I became kind of an expert in ad and this auctions, ad placements, etc., dynamic pricing, etc. And then I started to learn more about that industry in general, and I identified and in my search, and while I was there, I already had a few businesses. So one of them was social media marketing agency called Face to Face Media. It was a small agency, like in my pet project. We were helping Ukrainian local businesses to promote on Twitter Facebook, and also local social media network, vk.com. And then I became an expert in social networks and how do you kind of promote a business there. And then I realized that there is an opportunity to actually help businesses to use basically ad networks that are implemented inside these social media platforms, like Facebook ads, right, or LinkedIn ads. And it was early days when they only added APIs that you can pull to run ads remotely, and the interfaces were very bad. If you remember, interface of Facebook ads or like or on vk.com ads, like almost like 14 years ago, it was really, I mean, they were super primitive. And that's why, so I decided to, so I went to, like, first of all, we started with vk.com. I went to I was, so I went to their headquarters. We had a deal that I basically, we got their API, and we committed to bring some revenues to them because I already had some access to small businesses locally. Yeah, and we built a platform, started to promote local businesses there. We tried to scale it outside of Eastern Europe, but at that time I didn't have enough experience there. And from that, and actually, and at that time also started to explore different things where else we can run ads. And we also found a niche that smartphones started to just become something meaningful. And there were smartphone apps like iOS, iPhone apps, Android apps, and we also decided, what if we run ads there? And it basically gradually it evolved into a separate company that was later we called it Clicky. So at some point of time, I realized I actually work on two companies, and Clicky was and actually and Ad Center was doing kind of fine, but we were not able to scale it outside of Eastern Europe. So and I decided to sell it, and luckily, basically that. I was one of the companies I mentioned I was working on. It was before I started at Center as an employee. I was working for a US based company, Verta Media, that then became Adtelligence. So basically, when I decided to sell the company, I went just a few people, and one of them was actually the owner of Verta Media, and he ultimately agreed to buy the company because they had display ads, they had pay per click, they had contextual ads, but they didn't have anything on social. And it was a good, basically, it was like a pretty much very relevant add-on in terms of their product and also the team. So yeah, that's how it's. And for me, when I was 25, it was very meaningful. I bought a house, I bought a Porsche, of course, and a few other things, and I was having fun. And then I switched to a Click. Yeah, so maybe you have any questions on that.
I mean, probably the listeners are wondering what Porsche did you buy?
I bought Cayenne Sport, and I also upgraded it. It was it was the loudest Cayenne in Odessa at
Good
that
choice.
time.
Good choice. Now, for you, the next company was Clicky, and
Yeah,
you kind of like started on Clicky, even before the
yeah,
company
yeah.
Ad Center had wrapped up. So tell us about Clicky, and what was that journey like with Clicky? Because Clicky also, you guys tried the M&A, but the timing was off. So tell us about Clicky. And before, I guess, even we get to the M&A, what were the origin story of Clicky, and how did you guys go about really building the ARR? Because you stayed off from raising money until you had like a bunch of millions already in annual recurring revenue.
Yeah. So like yeah. So the idea was that Clicky didn't use any of the APIs, but Clicky, it was specifically like a marketplace for publishers and advertisers, and we started it again. We started it not even in mobile. In mobile, it really took off. But before mobile, we started it in like when I was still working on Ad Center. The same team did experiments, and we tried to place ads inside social media applications, gaming applications, on Facebook and on vk.com. It went well, but the market was small at that time, very small. So at first it was growing very fast, but then when we hit, I don't know, like 20, 30,000 a month, we got stuck, and there was a lot of competition then. because we were probably one of the first, but I didn't feel that, I didn't know how to scale and when I need to, I didn't feel market dynamics at that time. I couldn't zoom out and have a helicopter view like I can do now. And at that time, I was just like basically in a race without zooming out and looking at the opportunity holistically. So, and then we saw a mobile opportunity that, okay, there were some of these app developers started to launch apps on mobile. I'm like, okay, there it's even on earlier stage even than social apps, because social apps started to become something big. So yeah, so we went to so we quickly tried something like a POC of an ad server on mobile, and it started to be, this took off immediately, right? This so we were basically we were offering we were offering like installs. Like basically, imagine you're an app developer, you have a game or you have a taxi app or whatever, and you need targeted people installing your app in the US, in New York. So that's how then you come to Clicky, and basically we tell you it's going to be $3 per install, and then we place these ads in other apps or websites with mobile traffic that have enough, that have some available inventory, meaning traffic, and we connect them, and we develop the platform. It was our own IP. At that time, you didn't have any third-party ad servers, etc. You had to develop all of this from scratch, and that's what we've done. And so we were. It was a bootstrap company. At the time, I didn't know that it's called this way. I thought it's only the only one. The only way to build a business is it's like that. It was profitable, but not so much, because we had to grow, we had to reinvest, and at that time I also thought that I needed to have a bigger team. I had ambitions to have a very big team, and I thought that people were like the main solution to every problem, and so that's why we always had like like when we were kind of growing revenue, we also were growing costs. But yeah, we were still profitable, very fast growing. So we went from zero to like I would say so almost 4 million in revenue, annual revenue in just kind of 3 years. And then and then some VCs started to approach me because we started to be visible. I started to speak at the conferences, obviously, and I also was running the biggest one, a conference on mobile marketing in Eastern Europe called Mobile Beach Conference, because it was on the beach every summer in Odessa, and like the biggest one was like for 1,000 people, and we brought a lot of speakers from like it's the first time they visited. Many of them visited Ukraine, like from Facebook, Google, you name it. So we started to be visible. Some people started to like approach us to invest, but and only one VC was. I didn't understand why I needed to raise it, because I didn't understand that I could even be growing even faster, and get some expertise I didn't have. But one VC was really persistent, and they offered us they offered us secondaries. At that time, I only had one investor. It was also kind of the owner of that company that acquired Ad Center. The part of the deal was that he could invest in Clicky, so he put a small check in Clicky. He was the only one investor there, and and that's it. And so basically, the fund offered us secondaries, and so we raised 2 million. Half of the round went to us to buy the shares from us. Half of the round went to the company, and then we grew it 3x from that moment. In 2 years. So we closed this round in 2015. In 2017, we made 13.5 million in revenue.
So obviously, at this point, you start to receive inbound interest for M&A, and you were told a tough lesson, and the tough lesson is ultimately learning about timing when it comes to M&A. So tell us about this. What happened?
Yeah, so I mean that's a very good question. So I mean, yeah, it's we were growing super fast, and I thought, yeah, I was receiving some offers, not offers, but just interest. I was talking to these people, but to these companies, but either it was not serious, or or just they wanted to offer something that was lower than our than the expectations we had, but. I wanted to sell. No, ultimately with Clicky, I mean, that was the ultimate outcome I wanted, but I wanted to sell it a bit later. I wanted to hit 20 million at least. Um, but then the market started to, the market entered the downturn because around like 2017, there were so many companies in that, like trying, like competing in like delivering mobile installs to all these apps growing in the App Store and Google Play, that many bad actors started to enter the market. And by bad actors, I mean people with these fraudulent, like bot farms around the world, providing. You probably, you've seen lots of pictures of these thousands of iPhones in a warehouse somewhere in China. It's from those times. So, and these people were just, these iPhones were constantly in a loop installing different apps 24/7. And that's why some big advertisers started to pull out from this channel in general and started to sue their agencies, because it worked like that. You had Ubers of the world, you had the biggest gaming developers, etc., the publishers, and then they were working with their agencies, and agencies were working with companies like us. And then when these advertise, because we also promoted Uber and lots of other companies, right? But not directly. And when they started to pull out, it affected the entire industry. And that's why the multipliers went down, the budgets went down. And then I'm like, okay, it's time to sell. But when we approached this, it was already too late, because, the multiples were in a free fall, and even public companies, public ad tech companies at some point of time were selling for like point 1, point 2, point 3 to revenues. And then we had an offer, like a decent offer. I mean, considering everything, mostly in stock, but of a company that was going to do IPO soon. And we accepted it. We got into the ADD, but then their business actually started to struggle, and also they started to behave not in a nice way. They started to solicit my top managers, and yes, and at that time I already introduced a new CEO, although I was very involved. So they solicited my CEO. He started also to consult them. So it was a bad story, but a series of unfortunate events led us to closing the business, because when the deal fell apart, the team was demotivated. We didn't have enough runway, and I tried to save it, but I was already, by that time, already understood that, yes, that's it. So what helped me to go through that lesson, like easier, is because by that time I already introduced a new CEO. I was more like a chairman. I already was investing in a new company. So that's how it. And my main lesson was that it's never early to sell, but it's because then I started to talk to many founders who sold their companies. Just was interested to hear also their perspective, and I never heard anyone who regrets that they sold the company too early. But I met so many people who regretted that they just tried to sell it too late.
Timing. So obviously,
Yes.
after this, you did a bunch of stuff. Venture studio, a startup accelerator, called Wannabes. But one thing led to the next, and as you were saying, you started making investments in startups, and one of those investments ended up becoming your next chapter, 3D Look.
Mm-hmm.
So how do you go from being an investor to all of a sudden becoming the CEO of the company? And what were you guys doing at 3D Look?
Yeah, with 3D Look, it was more like a venture studio track, I would say, because I had an idea. What if because I was looking for an idea for to incubate a company, because I was still running a Clicky, but I wanted to just find some interest outside of edtech market, because I got very exhausted of the edtech market by that time, and I was very fascinated of everything related to augmented reality, computer vision, and what can be done with the smartphone camera. And it was like 2016, early 2016. At the time, Snap acquired a Ukrainian-born company, Luxury. It was founded by my friend. It also inspired me because they brought these lenses to Snap, right? These masks that you can put in your face. And I decided, okay, what we can do with computer vision that using very deep technical talent from Ukraine and my experience to sell this to big businesses outside of Ukraine. And that's how idea of 3D Look got born. That what if we create a solution that can allow anyone just to scan their bodies using a smartphone, just taking two pictures, front and side, and getting very accurate 3D model, all the measurements, etc. And luckily I had a friend who he was a very experienced product manager, and basically he left his job and his previous company, and he suggested like, what if he's going to be just running it at least on the first stage, because it was very technical at the beginning. And yeah, so I basically started to finance this thing. He was hiring developers and building some early prototypes. And only a year later, I realized that it's so fascinating, so interesting, and I really saw the kind of the future potential here that I decided to switch and basically just join it as a yeah. So I was already kind of of course the major shareholder because I was financing it, but so I joined it as a CEO.
So then, in this case, I mean, it was quite the journey. You guys raised 16 million, and it sounds
Mhm.
like things were heading to the right. But one thing that I want to ask you here is when when do you decide to leave? You know, as the CEO of a business. You know, here you are leading the chart. You know, for I think it was like 8 years or something like that. You know, quite some time. At what point do you realize that it's time to turn page?
Yeah, I mean, it's a very controversial topic for many founders because many founders I mean, that's very like it's a good question, like when and just if you should do it. But in my case, I know that like after like we were as you look at some point of time was growing very fast. Like we grew from like 100K in ARR to 1 million in just 1 year. And we raised Series A, 10 million Series A on top of that growth in 2021. But then we got stuck because we were still early on mobile body scanning market in general. It hasn't been because our bet was that it's going to become pervasive. Every consumer is going to just use smartphone to scan the body and buy clothing, use it in a fitness app, like send this data to a doctor or whatever. But it started to happen in some niche use cases. Like every policeman in the US can order properly fit body armor using our technology now, right? But it's in some narrow use cases, like only innovators use it, right? Even some big enterprises, right? But not, it didn't become pervasive. And the company had to reach a break-even point. So just to become sustainable. And I realized, okay, I'm not having fun anymore for a long time because the company needed a different part. No, it's not only about fun. I also realized that I didn't bring enough value to the company because the company needed a different type of a CEO at that point of time, more operational focused, and like to operate it as a business and not as a startup. And I realized it's time for me to move on. So I spent some time negotiating with my board last year because but eventually we agreed on everything. They kind of supported me. Then, and one of the biggest reasons why they supported me because I had a great candidate for a CEO position. So I mean, yeah. So Kate, she worked with me. So she joined us when we were like it was super early, when in a second year of the company, and she tried a lot of different roles inside the company. So she was a great candidate, and now she's actually she's killing it. I mean, she's doing great, and she's doing some things better than I did. And it's like also a new experience for me when you look at someone else running your company from the side from the sideline, and you feel happy about it. Yeah.
Now, in your case, you after this, you tested the whole venture capital thing. You know, you went at it. You know, I mean, you invested in like 60 startups yourself, but you went
Mhm.
at it on the venture capital side. You know, with an early stage fund. Why did you realize that that was not for you?
Uh, yeah, I always wanted to try to be a VC. I always thought that VC is the best job in the world because, you tap into different industries, you learn a lot, everyone wants you, you're the most popular person, I mean, out there. But the thing is that, yeah, I mean, I was able to, I mean, it was a great experience, but Uh, and I really learned a lot about different industries. I had a holistic view on a lot of industries, trends, etc. But what I didn't like is that I didn't feel that because I'm still a builder, I still have a founder mentality, and I just didn't realize that we were actually creating any value outside of the relatively small checks we were giving to founders, and. Many of so I was responsible as a partner. I was responsible for our portfolio. So as soon as we invested, I came in and I coached founders. But some of them were coachable, but many of them just wanted to just get a check and not even hear from us anymore. And I just didn't feel we created any value. And I realized that yeah, I still want to create a value by operating. And that's why I decided, I had a choice to become a full-time VC for the next like 10, 20 years, but I decided to probably not the journey for me.
Now, in your case, now you decided to take two things at the same time. One is really riding the whole AI wave, and then another one is basically with buying, optimizing for cash flow companies. So tell us about those two routes. One thing is doing one thing is already tough. You're doing it in parallel with two things.
Yeah, I mean, I realized that. So last year was like a year for me of like a transition, right? I was leaving my company as a CEO, so I had to go through. It was not easy also to make this final decision, and I was going through a lot of self-reflection. And I realized that, yeah, first of all, I really have a founder mindset. Building companies, especially 0 to 1, is the thing I want to do for the rest of my life. And secondly, I'm still a happier person and more fulfilled person when I do something on the side. And by something, I mean still more like investing or mentoring, because it also allows me to switch context. It allows me to zoom out and sometimes just look at my company, at my business from different angle. So that's my recipe, right? And that's why. So my main focus is still running my company as my new startup as a CEO, but I also discovered a new how to say new asset class or new opportunity, which is because when I was a VC, we had a bunch of startups that they built good, healthy early stage businesses, but they were not investable because they raised money from us, but then they couldn't grow enough, fast enough, so other people could invest in them, and they got stuck for a few years. And these people, they have very limited liquidity options because they are too small. If you're making like 1-2 million ARR, it's hard to sell it to anyone, and even to strategic investors, and especially to financial investors. So that's why I realized that, yeah, what if there is a kind of vehicle or micro PE fund to go and buy these businesses, let the founders be free so they can go and do something else, maybe provide at least some return to investors. But of course, it's not about them making money. It's just about closing the chapter gracefully and going and growing these businesses. Uh, Especially when what I and my team can do well, it's just going up market and building a go-to-market machine to sell it to enterprises. Yeah, and what that was this thesis. So I have a business partner in London. She brought a lot of corporate finance and also a VC experience. So we looked at more than 100 companies in like 1 to 5 million ARR. Um, and it's only B2B SaaS. And yeah, we actually we hopefully soon we're gonna announce the first deal. And Yeah, so this is the thing that is for me a combination of entrepreneurship and investment. It's called entrepreneurship through acquisition. And yeah, this is I believe in this thing because now there are lots of startups that over raised, especially in 2021,
Oh yeah,
2022,
the
and,
COVID
and
the COVID
now
valuations. Those
yes,
are
and
somewhere
yes,
else.
and now you have so many opportunities to buy the assets or to buy these companies, and also to set founders free, and also like to yes, because for them at some point of time for founders, the main thing is just when they basically let go of their ego, because ego is the main enemy always for founders, especially when they let go of their ego, then when they understand that no, it's just it's all about basically gracefully, basically finishing one chapter gracefully and properly switching to another one.
Oh, for sure. I think that the problem there with founders too is that when they become the company and they become attached to being the company, and I think that could be really toxic
Oh
actually,
yeah.
and really bad. So I guess the in this case too, the other route that you're doing in parallel is Eve. So tell us about Eve.
Yeah, I mean, even my yeah, it was my main focus, my startup number four. We want to replace executive assistants, meaning we want to replace humans in executive assistant roles, and we want to like now you can get executive assistant from some offshore country for $3,000 a month. On the average, we want to give it to you for like 10% of the cost, and we're going to replace at least 80% of the functionality. Now we have the first use case already in private beta, which is autopilot schedule management. So Eve is managing your schedule, rescheduling by understanding your preferences. So it's not like Calendly or Call.com or other tools that just basically block your fill in your open slots. No, here it's like you work with a human that remembers your preferences, gets better with every conversation, and really keeps everything all the preferences in the memory. And then we're going to be adding more use cases, and we started with individuals through the waitlist. We have a waitlist already, but then we going to go after teams. Yeah.
So then, obviously, in this case, like the what's happening with AI is crazy, and I guess in a world where the vision of Eve is fully realized, what does that world look like?
Yeah, I mean, it's the world when every human will have an AI extension sitting in all your communication channels and representing you there, and basically filtering 80% of noise, 80% of less important threads, conversations, etc. So you, as a human being, can focus on only the most high priority things and that are really precious. And everything else is going to be happening in autopilot. So basically, just extending human capabilities. So I believe in that future, and we are trying to make it happen.
So obviously, talking about the future here, I want to talk about the past. After now doing 4 startups, being on the VC side, I mean, everything. As you're, let's say, as I'm bringing you back in time, let's say when you were 18 years old and you were starting to experiment with perhaps what to do in the venture world, if you were to have a sit down with that younger 18-year-old, and you were able to tell that younger self one piece of advice for launching a business, what would that be and why, given what you know now?
Hmm, a great question. Uh, No, I probably would tell myself is to go and launch my first company already in the US and move to the US much earlier than I did, because I would definitely it would definitely accelerate I think my trajectory, and yeah, and then just basically that what I realized recently that um, a founder fails only when he stops building. So it's not about even outcomes, it's not about sizes of the exits and even exits at all. It's the path, it's the journey. And if you continue your building, you're always going to be happy and fulfilled.
So for the people that are listening, Vadim, I would love to reach out and say hi. What is the best way for them to do so?
I'm writing some useful stuff regularly on LinkedIn, and I'm also gonna be launching my email newsletter soon. So find me on LinkedIn, and also we have a wait list for Eve, so maybe I can somehow share it as well. Yeah.
Amazing. Well, hey, Vadim, thank you so much for being on the Deal Maker Show today. It has been an absolute honor to have you with us.
Thanks, Alejandro.